Hello everyone. In the time it takes to complete this presentation, Intel will have shipped about 10,000 semiconductor chips worldwide. Despite this massive scale, the company that once dominated computing is now fighting for its survival in an intensely competitive market. Hello, I'm Abhav Kunchakuri, and with my partner Arsh, we're excited to present our analysis of Intel, an industry giant at a crucial turning point, presenting both risks and investment opportunities.
Thanks, Abhav. Today, we'll walk through Intel's current position, financial health, competitive landscape, and ultimately, our investment recommendation.
Intel, founded in 1968 and headquartered in Santa Clara, California, was a pioneer in the semiconductor manufacturing. For decades, it dominated the CPU market, especially for PCs and servers. However, its stronghold has weakened due to rising competition from AMD, NVIDIA, and TSMC.
Intel operates across four key business segments. The Client Computing Group, or CCG, is based on consumer device processors. The Data Center and AI Group, or DCAI, is for data center and AI solutions. The Network and Edge, or NEX, is for networking infrastructure. And the Intel Foundry Services are for contract chip manufacturing. This diversified approach in Intel's strategy is based on its goal to regain market leadership, though each of the segments faces significant challenges.
Intel's financials are concerning. It has lost significant CPU market share, especially in premium segments, impacting stock performance. Major customers, including PC manufacturers and cloud providers, are seeking alternatives as we speak.
Intel's foundries are valuable assets but require constant modernization, leading to high capital expenditures. The company's strategy now includes contract manufacturing through Intel's Foundry Services, competing with TSMC and Samsung.
Intel's market cap is approximately $99 billion, with an enterprise value of $127 billion. Its stock has been very volatile, trading between $18.51 and $45.41 over the past year. The 2.2% dividend yield is appealing, but negative free cash flow, which is negative 15.9%, is what raises concerns for most investors.
Valuation metrics also highlight challenges, such as Intel's PE ratio of 45.8x, which seems high for a struggling company, and its price-to-book ratio of 1x, suggesting lower investor confidence in future growth. But the most concerning is its 2024 return on equity, negative 0.51%, indicating a failure to generate profits from shareholder investments.
So here's our investment thesis, and it focuses on three key areas: Intel's growth opportunities in AI and specialized computing, its competitive position against established and emerging semiconductor players, and its financial strength and ability to execute its turnaround strategies.
And overall, by analyzing these various factors, we aim to provide clear investment recommendations.
So now let's talk about industry analysis. The semiconductor industry is growing, driven by AI, 5G, and advanced manufacturing. However, Intel has struggled with delays in process technology, falling behind competitors moving to 3 nanometers and smaller nodes, while Intel is still stuck at 5 to 7.
To counter this, Intel is investing heavily in foundry capacity, but success depends on execution excellence in a competitive market. Semiconductor manufacturing cycles are volatile, making large capital investments risky.
Intel once had a strong pricing power due to performance leadership and branding. However, AMD's Ryzen processors and Apple's ARM-based chips, known as Apple Silicon, have reduced Intel's competitive edge.
And Intel's integrated device manufacturing model, or IDM, which was previously an advantage, now requires mastery of both chip design and manufacturing, whereas specialized competitors can only focus on just one.
Here we have Porter's 5 forces. So Intel's competitive environment is tough. There's a low threat of new entrants, which is 4, due to high capital barriers. However, high supplier power is 0, which is very high, as it relies on few key vendors like ASML.
Other factors include moderate customer bargaining power, which is a 2, as alternatives exist, but aren't always preferred. There's high threat of substitutes, rated as 1, with ARM-based chips gaining traction, and intense competition, 0, very high, from AMD, NVIDIA, and TSMC, limiting Intel's strategic flexibility.
Now let's talk about revenue drivers. Intel is targeting edge computing, high-performance graphics, and data center AI applications for future growth.
The Intel Foundry Services expansion is the biggest bet, but it requires Intel to develop customer-oriented capabilities to compete with TSMC.
Intel's revenue has declined by -2% annually due to market share losses. The IDM 2.0 strategy aims to reverse this through manufacturing upgrades and contract chip production, but it requires heavy spending.
Now, in March 2025, Intel appointed Lip-Bu Tan as CEO, signaling a shift in leadership strategy. His background in semiconductor capital equipment and venture capital suggests a startup mentality approach used to drive innovation.
And the picture you see on the screen here is of Pat, who was the previous CEO and was replaced by Lip due to the board of directors not trusting him. Now let's talk about our company valuation. Our valuation uses DCF and relative valuation models. Given Intel's challenges, our models suggest that the market undervalues Intel, but the execution risks remain.
We estimate Intel's target stock prices around $34, but this depends on successful execution of its turnaround strategy. Investors must weigh potential upside versus its various risks very carefully.
Intel's biggest risk is manufacturing execution. Process delays directly affect product competitiveness and profitability.
And competition remains fierce as geopolitical/supply chain risks further complicate Intel's future. AI is a double-edged sword, a growth opportunity, but also a threat if Intel fails to keep up.
Intel's new CEO, Lip-Bu Tan, is shifting the company's focus. His strategy includes fostering a startup mentality and divesting non-essential ventures to optimize capital allocation.
Now, these challenges could improve execution, but the effectiveness of Intel's turnaround strategy is still very uncertain.
Intel aims for 100% renewable energy use, but faces challenges in Scope 3 emissions.
And the company invests heavily in diversity, cybersecurity, and governance. But CEO compensation concerns remain. ESG factors are relevant for sustainably focused investors, but as we can see here, it's quite mixed and uncertain.
Intel, overall, is at a critical inflection point, balancing historical strengths with major execution risks.
And for this reason, due to the high levels of uncertainty, we advise to hold and view market trends before any major decisions. In fact, just today, Intel stocks plummeted. Thank you for your time, and we welcome any questions regarding our Intel investment analysis.